Hello, John Hively here. Today on Oligarchic News, the United States is facing a dilemma. On the one hand, President Donald Trump says negotiations are going on with China to end the tariffs of 145% that Chinese must pay when they import or export products to the United States. On the other hand, the Chinese say those negotiations aren't taking place. And the repercussions of this are enormous. If there are no negotiations going on, it's enormous, especially for Americans, but also for Chinese. So we'll see what's going on. But anyway, here's Breaking Points. It's a news organization, a subscription news organization. I highly recommend it. But anyway, this is their report.
So just got this. This is a new statement from the Chinese Foreign Ministry literally just this morning. They say Beijing is now telling the United States, you must completely cancel all unilateral tariff measures if it wants trade talks. The strongest comments yet from the Foreign Ministry. Beijing says there are no economic and trade negotiations between China and the United States, just confirming what I was saying earlier, despite some recent signs of softening on the issue. They say this is not sustainable, and they say the unilateral tariff measures were initiated by the United States. If the U.S. truly wants to solve the problem, it must completely cancel all measures against China and find a way to resolve differences through equal dialogue. So you can see exactly there. They're saying, no, we don't care anything that you say. Nothing is on the table. No communications, no high-level talks. Cancel them or so be it. And, the reason why I think they're on stronger ground is they've been preparing. This is going to be very relating to our Ukraine conversation. They have prepared for this for 20 years, and they have especially prepared for this in the last 5. And then,
so what happens if there are no negotiations going on? Well, let me tell you what's going to happen. In a few weeks, let's say 2 to 7 weeks or so, you're going to see store shelves emptied. Not completely, because there's always domestic production and Canadian stuff coming in. But a lot of the goods that we normally rely on from China, they're not going to be there. Because 145% tariff is a de facto embargo. No one's going to buy the stuff anyway, so no one's going to ship it here. And then, of course, you're going to see massive layoffs in retail, the longshoremen, truckers, and elsewhere. In effect, what you're likely going to see is a big recession. Now, right now, the markets are going up. The stock markets are going up because of Trump saying there are negotiations going on, which apparently there are not. And once the markets figure it out, once the big market makers figure it out, then the stock market's going to go back down. And that's going to be a really good time to buy if, in fact, they go down. Because this could be a big recession, and it could last for years. If you have Trump refusing to negotiate or back down, and the Chinese are not going to back down from them saying, you've got to end the tariffs completely before we begin negotiations, well, this could go on for years. So, what's this going to look like? Well, besides the unemployment situation and the recession probability or potential, we're going to have to pay, there's going to be a greater federal deficit, which is bigger now than it's ever been before. And there are going to be cutbacks in, say, things such as food stamps, Medicare, et cetera, because the interest on the debt is going to continue to go up. Now, what am I talking about? You're probably wondering. Let me show you what I'm talking about. Let me get my famous whiteboard. So in this whiteboard, you can see this is a pie chart. Okay, it's a handwritten pie chart. That's the best you're going to get from me. Anyway, so don't complain. Anyway, so this is the federal budget 2024. You notice the Social Security is almost $1.5 trillion of that. And the Social Security is self-funding. It is not really part of the federal budget. It's just there to mask how bad the federal budget is, because it has a $2.5 trillion surplus. Got that? Social Security is self-funding and should not be part of the federal budget. But that leaves defense So this is the 2024 federal budget. Defense was $885 billion. Well, Donald Trump signed a legislation, to increase that to $1 trillion for 2025. So what you'd have there is an increase in federal spending. And then, of course, you've got almost as much as federal defense, the military budget. Medicare, which is partially self-funding, is $842 billion last year. Medicaid's $558 billion last year. And then you have other mandatory federal expenditures, such as corporate subsidies, Elon Musk subsidies to the tune of about $38 billion. You have foreign aid, farm subsidies, and food stamps. So look, what's happening? The federal budget deficit is going to go up. And, that's right, we can't forget the interest on the debt, which was last year was $789 billion. Now look, that means that this line here is not going to be, it's not going to be $789 billion. It's going to be a lot more. So it's going to take up more of the federal budget because the deficit's getting bigger, but interest rates are also going up because of a variety of factors. And let me show you what those are. Okay, so the federal deficit's going up. Interest rates are going up because of the trade tariffs. Big holders of U.S. bonds. A bond is a debt. So, but anyway, the Japan and China can sell those freely, and Japan sold a bunch of them a couple weeks ago, and U.S. interest rates rose. So what is a bond? A bond is just a scrap of paper. It's electronic nowadays, but say it's a scrap of paper. It says bond. It's an IOU. And in that IOU, say this is a $100 bond, it pays interest. If it's 10 years, I think right now the 10-year bond, Treasury bond, U.S. government issues the Treasury bond, it to help pays for its deficit. That bond, say this is a $100 bond. When that bond comes due in, say, 10 years, while it pays 7% interest annually, when that bond comes due, how does the United States replace it? Okay, my bond comes due, give me my $100 back. Well, the federal government issues another bond. It's a revolving debt, you see. So it issues another bond and pays off this bond. But it's the interest that's really important. By the way, you got that? So they sell a bond in order to pay off the principal of another bond that's come due. It doesn't matter whether it's the 3-month bond, a 10-year bond, a 20-year bond, a 30-year bond, a 5-year bond, 1-year bond. It doesn't really matter. That's how it does. They sell a bond to pay off the principal of another bond when it comes due. But it's the interest that's really the important thing. And the interest rates are going up, and the deficit's going up. So with the interest rate going up, getting back to the whiteboard again, the amount of interest the federal government's going to have to pay, which comes out of tax dollars. So tax collections are, so either taxes are going to go up, and it's not likely going to happen, and because President Trump has this big, and the Republicans have this big tax cut for the wealthy, lined up for in the next couple of months. So, taxes are not going to go up. So they're going to have to be cutbacks because this is going to go, interest paid by the federal government is going to go from $789 billion up, possibly as much as to, who knows, could be $900 billion. But that means cutbacks to defense. That's not going to happen because they just increased it by $1 trillion to $1 trillion from less than $900 billion. And it's not going to be, nobody's going to tolerate Social Security cutbacks since that's self-funding anyway and shouldn't even be part of the federal budget. So what are they looking at? Well, Elon Musk and corporate subsidies are not going to be cut. But then there's Medicare, Medicaid, food stamps, maybe some farm subsidies, but not if you're a corporate farmer. So that's what's going on. So you're going to need to look, during a recession, there's going to have to be cutbacks to those things, unless, of course, the federal deficit could be increase, which it can be since the Treasury Department, they issue those bonds and then the Federal Reserve can simply buy them. In other words, the United States is just floating on air right now anyway. But anyway, the sun's out and I want to get going. But I hope this explains something to you. The federal deficit is, the tariffs are a big thing. Donald Trump is having problems right now with the Chinese. And they're not going to they're not doing any dealing until that 145% tariff is gone. And I'm gone because the sun's out. So have a good one. If you, please spread the word. If you find this interesting at all, like, share, and subscribe. And then spread the word, because I have a battle plan. We have a massive oligarchy government. Government's controlled by an oligarchy, a few rich people. So I have a battle plan to end that, so we can end that. I'm going to unveil that this summer. I'm building the foundations for it. Oh, damn, the sun's coming out. Okay, I'm out of here. Have a good one. Bye.